All right, looks like we're live. Welcome, 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 everybody. Say what's up in the chat. We would love to see who we've got on the call tonight. Will be somewhat interactive. It'll only be our faces that you'll get to see, but we definitely want to interact with you guys lots on the chat. Hey, Justin. Hey, Omar. Nice to see you. Kapila. Nice to see you. I hope I said your name right. Definitely, we had over 220 people register for this, so I know that this is a hot topic, and I'm really excited. We've been able to put an awesome panel together, and these guys have been working really hard to bring you the information that you guys need. I'm going to just take a few more minutes, let a few more people pile on, because once we get rolling, we are not going to stop. So let us know in the chat, are you guys currently short-term rental owners, or are you looking at this from a different perspective? Let us know in the chat. Let's see who we got. Happy Thursday to you too, Elaine. Nice to see you. Hey, Steve, you do own it? Yep, good. I think a lot of us on here are. Most of the people on our panel are in the same boat. Patrick, you're a long-term rental owner, so yeah, this will affect you too. Bonnie, yeah, STR, and you had the non-conforming clause stripped. What a pain in the butt that was, hey? Imagine we all got rug pulled here. Rob, vacation rental and property owner, you bet. And Greg, investigating the short-term rental market at this time. Well, there might be some interesting opportunity for you as well, and you're going to learn a little bit more about that tonight as well. Yeah, Kelly, I'm hearing that static as well. Maybe what we can do is get everybody who's not presenting right at this second to mute, because I'm hearing that same static. Is my audio okay? Let me know if you guys can hear me clearly. Static aside, is my audio decent? Good. Thanks, Elaine. Gail, you're a short-term rental owner too. Got it. Well, you're going to get lots of valuable information tonight. You bet. Good. I still hear that static. If we can, see if there's anything we can do. Yeah, Dano, we agree. Okay, we got it cleared up. Whatever just happened, that was the ticket. You guys can all hear me? Good. We're not going to drive everybody crazy, which is the goal. Good, Joey, multiple property owner. Got it. You're renting long term. But yeah, I agree. There will be some major impacts on all of the owners on this call. So we're going to kick things off here right now. It's 5 past the hour, and we respect your time. Appreciate you making that investment of your time, and I promise to give you a positive ROI on that. So let's get into it. A lot of people on this call are scratching their heads trying to do the math and figure out, what do I do next? How does this affect me? What, if any, silver lining might there be for me and for my rental portfolio? And so we're going to endeavor to shed some light on all of that for you guys tonight. A little bit of housekeeping. What tonight is about, we're going to try to give you total clarity on the new rules. We're going to help you understand the current markets, and you'll see S markets because there are different markets. There is the resale market, there's the rental market, there's the short-term rental market. There's all kinds of different markets to consider, and so we're going to unpack all of that for you tonight, and then hopefully give you a good understanding of what your options are going forward. And then you'll have the opportunity to ask each of the experts on the panel with a Q&A. So what I would ask is, as you're going, write your questions in the chat, because when we get to the Q&A after each of the little segments, we'll have the opportunity to ask the expert, and we're going to get all of your questions asked or answered here tonight. What tonight is not about, we had a lot of people reach out for various, legal and accounting advice. This is not, we are not accountants. We are not lawyers. So this is not to be considered or construed as legal or accounting advice. This also is not a forum to discuss pushing back against the rules. I know there are lots of groups doing that, and I'm not really here to cast judgment about the rules themselves, although I'm sure you can infer from my tone how I feel about it. That's not what this is about. This is really about us trying to work within the new guidelines and figure out how to best maneuver and best navigate what looks to be a foregone conclusion. There are lots of other groups that you can get involved with that are looking to mount an offensive or against this. That's not what this group's about. And thirdly, just to put everyone at ease, yes, we sell real estate. Yes, we have a property management company, but no, this is not a sales pitch in any way. This is purely about giving you the information that you need to make informed decisions about your real estate. So a quick intro on our expert panel. I'm the old guy on the left. My name is AJ Hazy. I'm the broker owner here at Vantage West Realty, and we have 3 different divisions. We've got our pre-construction division, our resale division, and our property management division, and so I'm at the head of that. I have my friend and colleague and partner Darcy Fiender here as well. He's also a short-term rental owner. He's one of the top agents in our firm, and he's taken a special interest in these new rules and made it his mission to become really well versed in it. So he's going to share what the rules are and kind of break that down for us. And then I have my esteemed colleague Amanda Tack. She's one of our top agents here at Vantage West. She's been with us for a long time. She also owns vacation rentals, so this is near and dear to her heart. And she's going to talk about where the resale market is and how that might impact your decisions going forward. And then I have Lindsay. She helped me build the property management division from the ground up. She's my most experienced property manager and a dear friend, and she is going to share with us the long-term rental side of things and answer your questions there. And then lastly, I have Kim from Rome, and she is our short-term rental specialist. She's the person we send our short-term rental clients to, and she's also going to talk to you about a new segment of the market that seems to be gaining some traction, which is a mid-term rental. So firstly, I'm going to kick it over to my friend Darcy. He's going to talk to you guys about specifically what's changed, what some of the exemptions are, just to get everybody operating from the same baseline amount of knowledge. And then, of course, you'll have the opportunity to ask Darcy, and we'll do our best amongst ourselves to answer any questions that you've got. So without further ado, I will kick it over to my friend Darcy. Take us away, my friend.
Yeah, right on. Thanks, AJ. How's the audio?
Sound great.
Cool. So I'll give some background on myself. As AJ mentioned, I am a realtor here with Vantage West. I've been here for coming up on 7 years. I've helped hundreds and hundreds of clients buy properties. My focus has been shifting more towards investment real estate, and a lot of the clients that I've worked with recently have gotten into this short-term rental space. So like AJ said, I did take a special interest in this. My fiance and I actually, we renovated our house in order to have a legal conforming short-term rental suite within it. And again, these rules affect us. So that's why I took a special interest in this and why I wanted to share some of the info that I've garnered along the way. And I'll try to be as comprehensive as possible. This will not cover everything. There's a lot going on. So if you have more questions or want more information, obviously reach out to us.
Beautiful.
So basically there's 2 different things at play here. There's the provincial changes, which obviously being provincial affect the whole province. And then we've got each city that can do its own bylaws and make its own changes. So I'm going to talk about both. I'll talk about what's happening at the provincial level and at the municipal level as to what pertains to us. So obviously we work in the Okanagan, we'll focus on the Okanagan. So the provincial change, obviously the big one is banning short-term rentals that aren't your primary residence. So people that bought a second home or a second apartment that they were running as a short-term rental, the province has come in and they've abolished that. You know, you can no longer do that. The intention being they want to get more properties up on the long-term rental stock. They've changed the definition of a short-term rental. Generally, it was accepted that less than 30 days was considered a short-term rental. They've upped that to 90 now. They've increased fines, and they're putting together a task force to increase regulation on this. They're also forcing the hand of the short-term rental platforms like Airbnb and Vrbo to now share data with them so that they can enforce all of what they're planning to do here. Someone mentioned it in the chat. They are removing the non-conforming protection, which is a big one. So usually historically what happens is if a bylaw gets changed from something that was allowed to no longer being allowed, it would in effect get grandfathered in and you could continue to do that. The province has actually put that right into the legislation that's specific to this. You're no longer protected by that legal non-conforming use. There are exceptions to all of this too. So at the very end, we're going to talk about that, but you know, it's not completely encompassing of the province, although very much so it affects the majority of us. So I've decided to break this down. Again, we're going to talk fairly hyper-local where we live, work, and love to be. So for Kelowna, the way Kelowna was always set up, and I don't know that a lot of people understood this, but Kelowna did not allow you to Airbnb for short-term rent a legal suite or a carriage house. So you never had that ability. I think a lot of people were under the impression that the provincial ban would take this away. Within Kelowna, that was actually never allowed. If you were going to do a short-term rental, it had to be in a zone specifically set up for short-term rentals, or rooms within your primary residence, or it could, oh, I guess I covered it. It could have been an apartment where it was zoned for this. You did have to always pull a license. That's nothing new. Kelowna's been doing licensing for years for short-term rentals. The big change that Kelowna is doing, and this is being more restrictive than what the province had planned, is to remove that principal use exemption. So the city is actually looking to get rid of people that use this property for the majority of the year and then short-term rent in the off season, or people that, and this is where we need some clarity. I don't have 100% clarity on this, but even people that rented rooms within their property, that they're trying to put the exemption or remove the exemption from. So you can no longer do that within the city of Kelowna. They did apply for some exemptions, but the province vetoed those. I'm assuming the big reason being, and we'll talk a little bit about this, if your vacancy rate of the municipality is 3% or greater, they'll more likely grant exemptions, but below that, they won't. I called the city for people that are looking to get licenses right now, and I talked to them. Currently, they're not approving new applications until all of this gets settled. So if you were thinking you could rush out and try to get a new application, by all means, continue to try. But my understanding is that they're no longer issuing new applications or even reviewing new applications at the moment. And then one thing that I thought was interesting, although this isn't 100% clear either, but the license for the short-term rental, it can in effect run with the land so long as you continue operating the property with that license and don't let that lapse for a period of more than 6 months. So the people that currently have their licenses, if you're operating a conforming Airbnb and you go and you sell your property and somebody else buys it, so long as they renew and keep operating that business within a 6-month period and don't let that 6 months lapse, my understanding is you can actually maintain that license into the future. So I thought that was interesting. Maybe there is some benefit to that for people that want to get into the short-term rental space, although I think, there's risk and we'll have to do some due diligence on that one. West Kelowna. So West Kelowna already trends more in line with what the province is trying to do. Historically, they did allow for Airbnbs out of suites and carriage houses. That being said, you still had to get a license in West Kelowna, and there were specified zones. It wasn't carte blanche. You had to do it within the zones that allowed for it. West Kelowna is currently updating their bylaw. One thing that they did mention, which I thought was interesting, they will only allow this in houses with suites and carriage houses. So if you just have a single family detached with no secondary living unit, they won't grant you the license. That will have to stay on the long-term rental stock. But if you have some sort of secondary accommodation within the property, they will allow you to run the Airbnb out of that property. My understanding after talking to the city of West Kelowna was that none of the strata properties, Barona Beach, the Cove, those type of properties, none of them will remain conforming once these rules take effect, just based on what the current zoning was and what the province is doing. And as of right now, the city of West Kelowna will issue what they call a permit to operate. It's not technically a business license, but it does allow you to operate your short-term rental. And then once they finish updating their bylaw, they'll issue you a business license, assuming that you are conforming to what the regulations are. So other areas, obviously those are kind of the two big areas that we work in. A little bit to the south, Peachland there, very similar to West Kelowna with what they intend to do. You do need to have a license, and they are not allowing whole home short-term rentals. They'll allow it out of a suite or a carriage house. And I should mention as well, it goes the other way. So if you are living in the suite, you can Airbnb the main. It doesn't have to be just the smaller portion of your property getting put up on the Airbnb. Lake Country does not allow it in secondary suites or carriage houses. And then the regional districts, RDCO, RDNO, the big shift here is that they're now able to offer business licenses. Prior to this, they didn't have the ability to issue business licenses. The province has granted them this ability. So very likely that all of the regional districts around us will now start regulating short-term rentals by having people pull licenses to do them. One question we actually asked our team what people were asking about, one that came up a couple of times was how do they plan to enforce all of this? So I mentioned it at the beginning, Airbnb, VRBO, like those websites that host short-term rentals, they're going to be required to share data with the province. And then my understanding is the province is going to share this data with the cities in order to help the cities enforce. the way it's broken down is cities are required to enforce the city's bylaw. So for Kelowna, being that they're more restrictive, they'll be the ones required to enforce the more restrictive bylaw. In terms of the non-principal residence requirement that the provincial government is putting into place, the provincial government is going to regulate that, and their plan is to put together a registry and a task force to actually tackle this. And then they've increased the fines. So Kim might be able to speak a little bit more to this, but what I read is the fines are increasing from a limit of $1,000 a day to $3,000 a day for people that are caught in being in an infraction on this bylaw. So the exemptions, regional districts, as I mentioned, or I guess I didn't really say this, so they are actually exempt from this. It's municipalities that are getting governed by the provincial changes. The regional districts aren't caught by this. If you're a municipality under 10,000 people in population, you are exempt from this. However, if you abut right to a larger municipality, you will be captured. So if you're within 15 kilometers, if you're over 10,000, but your vacancy rate is greater than 3%, you can apply to the province to get exempt from these regulations that are coming into effect. And then there are 14 resort communities around BC that automatically were exempt. I think, like Golden and a few others. There's a list. I can send it to you if people are curious what they actually are. And then the ski hills, like the very much recreation style properties like Big White and Silver Star, those are exempt as well. Strata hotels and timeshares. So if you own a property that you cannot live in full time, the province isn't going to make you live in there full time and go against those. So if you have a timeshare or if it's a strata title hotel like the Delta Grand downtown, those will be continued as short-term rentals, or you'll be allowed to continue to operate those as short-term rentals. And then the big one, where I think the whole team here sees some potential value, would be the West Bank First Nations land. I did actually have a call with them and got some really good information about what's going on here. So there's a couple of communities that have historically been very much short-term rental positive, or they encourage them there. Like the first one that comes to mind is Copper Sky. So if you know of it, it's got the pools and the outdoor courts and all of that. There's no intent to change that. And sorry, I'll step back. So First Nations land is not governed by these provincial changes at all. So it's not an exemption. They're just actually not governed by it. And when I talked to them, they had no plans to adopt any major changes to this. So there are, again, 4 or 5 communities that allow for short-term rentals within West Bank First Nations so far. There's also some even on this side of the bridge. One that jumps to mind, Deer Meadows Estates. It's a manufactured home park, but it's on native land, and they still allow for short-term rentals. And then I talked to the WFN band about what their plans are and how it's regulated on single-family properties. And they have no intent to actually stop this. My discussion with them was that they're actually seeing this as an opportunity for themselves to capitalize on the short-term rental market. And even on the single family side of things, how it works now is if you have a property that is a single family home on West Bank First Nations, if you want to put a suite in it or short-term rent it, you apply for a zoning change. And as of now, they haven't rejected any zoning changes. Once you get the new zoning, you pull your license and away you go. You can short-term rent it. So definitely some opportunity there, which kind of is a good segue into our next speaker, which is Amanda, who's going to talk about what's happening in our market.
Now, before we do that, I want to just see if we can elicit any more questions. Elaine had a great question. How about La Casa? Do we know whether La Casa would fall into an exemption? They're on freehold land, but are they part of one of these communities that's under 10,000?
You bet. So La Casa being governed by the regional district, with the research I did, they are not governed by this, so you can still short-term rent out there.
Great. Might be a little value bump for them.
Yeah.
Dano asked if we could send a list of First Nation properties allowing. Yeah, we definitely can do that. Amanda or Darcy maybe take down Dano's email address, and we can certainly get you that list. Pop your email address in the chat if you don't mind, or you can send a private email to us if you prefer. No problem. Any other questions?
Cool.
You guys have been great, super interactive so far. So if no other questions, obviously you can pop them in the chat as you go, and I'll do my best to answer them on the fly. Kapila, okay, we do have some questions. Right on. Is Lake Country allows to do short-term, Kapila, Lake Country allows to do short-term, them rent the basement of principal. I think what you're saying is are you allowed to rent out your basement if it's your principal home in Lake Country?
Yeah. My understanding is yes, if it's not a basement suite, again, they don't allow short-term rentals out of suites or carriage houses, but my understanding is you can do it within your primary residence, but you do need to be licensed. And with any property you buy, you want to check the zoning and make sure that it's conforming.
Okay. Rosalie, no problem. Send us a private message with your email address and we will get you set up on that list. We can happy to do it. Lee wants us to confirm that a basement suite in the city of Kelowna with an existing license can continue.
Yeah, so the city's stance was if they've issued the license, they're not going to take it away. Now, the question mark here being the city wouldn't have issued a license for a basement suite if it was legal in West Kelowna. So you'd want to confirm if it was like a non-legal basement suite that you were renting, then as far as the city is concerned, that's within your primary residence. They would have issued the license and you can continue running the short-term rental out of your primary residence. If you've got a legal basement suite, and you got a license for an Airbnb, then you got to tell me how you did that because that's cool.
Okay, no problem. Yes, there will be a recording that you'll have access to there, Jeff. No problem. Nicole, you are correct that leased land is exempt. That's exactly what we just finished saying. If principal use in Kelowna, I'm not sure I understand the question there, but maybe restate it. What's the difference between renting a basement suite and a basement? Not really anything other than a suite means there's a kitchen and a door and a separate entrance and all that. A basement is just that. Most people don't rent just basements. Usually they're suites. Can you convert an apartment building into a hotel? Not without hotel zoning, um, if all owners agree. Bogdan, that's an interesting question. I suspect that current zoning would not allow for a hotel primary, but I could be wrong. That's a land use issue, and getting all of the owners to agree will be a very tall task, but be interesting to see. There's a lot of people that stay there and live there year round, so it'd be hard to get people on board for that, but maybe. Shelley, is ALR land exempt? Not to my knowledge, but correct me if I'm wrong, Darcy. I don't know why the ALR land would be exempt. It might be possible that under an agritourism
Yeah,
scenario.
that's the exemption that I saw.
Yeah,
I can look into that more.
agritourism under ALR land. So yeah, if you have ALR land and you are conforming to the agritourism bylaw, it's possible you could be exempt. Leon wants to know what areas are considered regional areas that are not included in the rules. Um, the best thing to do actually is to go on the regional district website and look at the map. You'll be able to see it. There's a fair amount of different spots, and it would take a minute to share all of that with you. But um, yeah, easy to quickly Google regional district, and if you want us to send you a list of properties on those areas, happy to do it. Joey wants to know if we can continue to rent private rooms out in our homes. That's the thing I'm not totally sure you are anymore based on what it sounds like they're trying to do. Right, Darcy?
Yeah, I mean, I think this one's kind of falls under that gray area. Let me get back to you on that one, Joey. I'll do some more digging into that and how they would classify that.
Um, yeah, and then are we going to discuss how the empty or unoccupied rules will accept an out-of-province investor? Well, to get around that, I mean, what they want is that you are attempting to make it a short-term rental. It doesn't have to necessarily be full. It just has to be available stock. That was the spirit of what they're doing. So if you can demonstrate that you are making all available or all possible effort to create rental stock, then you're complying to the spec tax, vacancy tax rules. All right. Awesome questions, guys. Keep them coming. Amanda, we're going to turn it over to you, and you can talk to us a little bit about what's going on in the resale market. I know you got some interesting case studies to
Mhm.
share as well.
Hi, everyone. Yeah, I've been working alongside AJ now for many years, and I just want to hop on here and talk about the market a little bit. I'm passionate about Airbnbs as I own a couple myself, as well as long-term rentals, and so I've been able to dabble in both. And yeah, this speaks close to my heart. I've got some I'm currently operating, and then I've also personally been affected as I'd bought one on the pre-sale side. So if anyone's feeling that or wants to discuss anything further apart from this, I'm here to chat.
Awesome.
Yeah, so I wanted to talk about some good things or some positive and not just, doom and gloom about what's being lost. So I really think there's a great opportunity in West Bank First Nations land. And that's something I think so many people have shied away from, have been, afraid of just the impressions that people had that they're just going to take away the land and whatnot. But we've come a long way from those times. And with the leases we have in place, they're as secure as a freehold title. So you can really have a lot of peace of mind going into these. And so places like Shelter Bay, Westrich, as well as Copper Sky are on West Bank First Nations land, but are places that you'll be able to allow to short-term rental. Westrich is currently being constructed. Westrich is still a ways out, but Copper Sky is a development you could get into right now. And they originally, when they were first built, had a 99-year lease. It's, like I was saying, as secure as a freehold title. You can get standard financing on there, even with as little as 5% down. So it's something for any buyer to consider looking at. The benefits of getting on West Bank First Nations land is that you are getting way better bang for buck. For $500,000, you could be getting into a 2-bedroom, 2-bathroom condo with lake views that's got a swimming pool, got a gym, and you're just a couple minutes to the West Bank Center area, so your location's great. So you're getting all these amenities, and like the units are finished beautifully as well. And to get into that for $500,000, you'd probably be spending an extra $200,000 if it was a freehold property. Additional benefits of being on West Bank First Nations land is you don't have to pay property transfer tax, so you're saving on your closing costs, as well as you don't have to worry about speculation tax. So 2 things that really can put someone's mind at ease. And when it comes to rentals, whether it's long-term or short-term, you're not renting at a discounted price because you're on West Bank First Nations land. So when you're looking at your return on your investment, your cash flow, this could be a really great opportunity to check out. So yeah. And then just kind of touching on the buildings that have been affected. Some of the biggest ones that we will see the biggest changes to are Sunset Waterfront Resort, Discovery Bay, Seoul Downtown, Brooklyn, Cambridge House, Playa del Sol in the Lower Mission, Seoul KLO, Mission Shores. By the university, there's Pinnacle Point and West Kelowna, Brona Beach, and the Cove. There's a couple others, but those are the big ones that I think have been a major focal point. Overall, there's over 20 plus developments that have been affected throughout the Okanagan. And I've been getting lots of questions about how that is affecting the market. We're definitely seeing things slow down significantly. Just looking overall at the developments, we currently have over 38 months of inventory between all the developments. On average, we've only been seeing about 2 sales per month, and there's over 76 active listings currently. So when we're looking at what kind of a market we're in, if we're in a seller's market, we would see about 2 to 3 months of inventory. If it's a balanced market, we'd see about 5 to 6 months of inventory. But based on the fact that we have over 38 months of inventory, we are heavily in a buyer's market, which moving forward will create downward pressure on pricing if people do want to offload their units. So as a seller, you're really going to have to look at your numbers overall. As a buyer, if the whole short-term rental aspect wasn't a big deal, then looking at some of these units here that are in great locations, there could be great opportunities to get into the market. So I did some case studies because people wanted to know about what the value difference is between something that allows short-term rentals and those that don't allow short-term rentals. So just did some case studies here we have Sunset Resort and Lagoons. They're both located on Sunset Drive. Looking at the difference between 732 square feet to 600, my bad. So what you would see is 112 Sunset Road, which is the one that allows short-term rentals, you're selling for about $732 a square foot versus the Lagoons where you're about $665 a square foot. And this is just running across multiple developments. You're looking at about a 7 to 10% price premium for something that's designated with short-term rental zoning. And same thing for Brooklyn and Ella, both again located downtown, high rises. So Brooklyn, we're looking at about $884 a square foot versus Ella, which is about $806 a square foot. So again, falling around that 10% price premium for short-term rental zoning.
Yeah, and I'll just jump in there. Just the reason why we show that is so that you understand that up till this point, there has been a premium placed on this zoning, on this ability to do short-term rentals. And what we have determined from the data is that a buyer had been willing to give about a 10% premium on this type of zoning. So what we would expect then is an equalization as we go through the price discovery of all of this. Obviously there's no more premium for short-term rentals. It's likely that we'll see the prices come down to be, kind of comparable with the other condos. Now, all boats rise and come down with the tide, so that doesn't necessarily mean that things will drop to 806 and that's the floor. What that means is that there'll be no more premium, and then again, it'll come down to supply and demand. If there's far more condos on the market than there is demand, then the prices must come down in order to meet the level of demand. That's just how it works. So that's mainly what we're trying to show you with these two case studies, is that you can see that premium will likely disappear or has already disappeared. So with that in mind, as it relates to sales, what questions might you have? And let me just catch up as you guys are putting those in the chat. Yeah, so a family member using your home is fine. I mean, that's absolutely no problem. Angela, what about West Harbor? West Harbor is on WFN, but from my understanding, the homeowners association there is not about short-term rentals, so they have their own set of rules that would. So it's not a rule that's coming from the municipality or from the province, but rather just the HOA themselves, or the strata, I should say.
Yeah, they've never allowed short-term rentals there, and
Yeah.
they don't intend to.
Okay. The lagoons has never been allowed a short-term rental, so that's always been non-zoned for that. The building that we showed in the case study was the only one, which is Sunset Bay Resort. That was the only one that had the zoning. The dolphins, the lagoons, they were not exempt, and so that's why they make for a good case study, because effectively they're the same location. The only difference between the two, really, other than a few years of build date, is the fact that one had that zoning. So, DJ,
Discovery Bay as well is right next to there, so we just used one or the other. More or less, it worked out to the same thing.
Yep, DJ, we listed all the benefits of buying on First Nations land, but we can go through them again. So no transfer tax, no spec tax. You're not going to pay any GST as well. So that's so no GST, no PST on brand new product, which is great. The no speculation tax is wonderful, and of course they continue to allow short-term rentals. So there's a lot of benefits economically to considering First Nations land, and I think there's probably going to be a little price pop because up till this point, those were sold at a pretty significant discount as compared to their freehold counterpart. James wants to know, in our opinion, after tourism is impacted, do you think they will soon reverse this? That is a crystal ball ask question. I don't know. I mean, if we were to end up with a completely different ideological group running our country and province, potentially, but provincially, I don't know that that's on the horizon. It feels like, looking at the message boards, looking at the sentiment out there, that there are a very large group of people who are absolutely for this, and those are the same people who show up to the voting box. And I think that I don't know, it would be tough sledding to think this will get overturned anytime soon. Okay. Jeff wants to know, what are the negatives on First Nations land? You're dealing with a stigma that has existed for many, many years, not necessarily that it was fair, but especially people from the coast, they won't touch or haven't been willing to touch First Nations land for a very long time based on horror stories of leases not being renewed, etc. But these new leases that are 125 years, they're bulletproof, and a lot of the prepaid leases, right? So you get the same bundle of rights. I remember I went through an exercise because we were selling Elkridge on the west side, and so I had to overcome this objection when we were dealing with it. And so I did the research, and the bundle of rights you get on a West Bank First Nations is identical to the bundle of rights that you get when you buy on freehold. And the reality of it, people say, well, you don't own it. Well, check your title on your freehold. It says Her Majesty the Queen, or now it'll probably say His Majesty the King on the new titles. But that the reality of it is there's always somebody above us on those. And the other thing that it was interesting, similar to the case study we did here, looking at two things that were side by side that are similar. In Lakeview Heights over in West Kelowna, there's a neighborhood called Lake Ridge Park. And Lake Ridge Park is a nice area kind of down by the Max SO there. And when you go in, you don't know which side of the street is freehold and which side is leasehold, but the homes they're built in the same era, and there's very little differences other than the fact that half of the side is on West Bank First Nations. And so when you graph their appreciation over the last 30 years, because that was built out in the 80s, you get a chance to see, well, what is the change in market dynamics? And what was interesting is when you graphed them both side by side, that the First Nations land kept step exactly on the highs and the lows with freehold land. There was no difference to it. And so that was really interesting. So the thought that a lot of people have is, will First Nations land appreciate? And the answer is, yeah, it definitely will. Good. Joey, I believe the government initiative is to increase affordable housing. So how will the sell of many of the units which are high end going to address the problem? Well, not all of the units that are going to get put on the market are high end. The high end ones, of course, are not going to solve the affordability crisis, but additional inventory hitting the market. I think a lot of people on this call will opt to sell because they probably are sitting on some decent capital gains, and they're going to just put their money in the bank, enjoy a nice risk-free return for a while, and wait for an opportunity. And I think a lot of people will do that. And if many people choose that route over time, that will create more affordable units for people to absorb. And of course, there's the other side of it, which is that it's not logical at all. It's just, it's posturing, and it's, typical policy that's designed to sound good and make for good sound bites, and isn't really well thought through. So again, I'm kind of giving my opinion on things, but yeah, as far as, well, will this solve the affordability crisis? It's unlikely, given the fact that we have, nearly 1 million new Canadian immigrants coming in each year, and all told, if all of these properties became available across Canada, you'd only have 100,000 new units. So it's not even enough to fill the demand of who's coming to our country on an annual basis. Okay, any other questions before we move on to our next presenter? Oh, Dana wants to know, does that mean leaseholds on Tower Ranch is now short-term rentable? Again, I think that comes down to the strata. Does anybody have any insight on that?
That'll be a no. They're going to have restrictions around rentals up there. So yeah, keep in mind with all of these properties, there's like kind of three governing bodies now. You've got the provincial government regulations, you've got the municipal regulations, and then any property that's a strata or an HOA, they're going to have their own regulations. So when we say WFN, you can short-term rent, even that's not carte blanche. Like, you still have to figure out which community you want to buy in and make sure that you can. We know for sure Copper Sky, Shelter Bay, all those ones are good. We've talked to the WFN about that, but there's three things you have to check to make sure that you can do your short-term rental there. And Dana, you had another question about 91 days. I don't think I mentioned this, but one interesting thing that I saw with the provincial guidelines was that cities can actually opt to go less than 90 days to define their short-term rental. So the provincial guideline is 90 days. This is like the one area where cities can actually be less restrictive, and they can take that down to 30 days. So that's a little bit up for debate, depends which way they go. I imagine Kelowna, considering they're trying to be more restrictive, will stick with the 90-day short-term rental definition. West Kelowna, maybe they'll be 30, but that we don't know the definitive answer on right now.
Nice. Richard asked, has any restrictions on home share platforms like Home Exchange been made, and where you get points for renting your home? My understanding is that the exchange platforms are still going to be operational, and that will be an option for you if you do want to put your home on those platforms. There'll be nothing restricting you from that. I plan to take advantage of that myself. I think those platforms will become a lot more popular, which will create more options now. And then Jeff, yeah, I saw that. I sort of ducked your question because in the beginning I did say that this is not about us mounting an offense, but I do think there will be class action lawsuits, but that's not what we're here to discuss here tonight, unfortunately. I'm sure everybody on this thing would be happy to do that, and if I find out that there is one or whatever, I'll steer you in the right direction, but that's not what we're here to talk about tonight, totally. Chris, you're asking about Granite. It's your principal residence. And you did receive your license. Darcy, do you want to address the Granite?
Yeah, my understanding is that you are good to continue running it so long as you abide by the new guidelines, and it actually is your principal residence. My understanding is you're good to go. Yeah.
Okay. Awesome. All right, let's keep on trucking. We have the beautiful Lindsay Anderson, our senior property manager over at Vantage West Property Management. She's going to share with us the lay of the land and landscape in the property management space as it pertains to long-term rentals. So I'll let you take it away, Linz.
All right. Can you hear me all right?
Sure can.
Sounds good. Okay. Well, first off, big thanks to UHA for organizing this and to my fellow panel members. And thanks to everyone for hopping online so we can kind of learn alongside one another as we kind of complete our due diligence and continue to develop as investors. I'm also an investor. I've been in the real estate market for about 24 years now, and I have investment properties myself, which is how I got into property management. I'm also very passionate about this. I'd like to start by just giving kind of a general summary of what we're looking at right now with the market. We did some research today, found through Castanet, Facebook, and rentals.ca 643 active listings that are condos and townhomes available for rent right now. And what I focused on with those was primarily trying to decipher how many of those are have been Airbnb'd or have been kind of short-term rental properties in the past that are now turning into longer term or kind of reaction based on what we're dealing with now with these changes. What I noticed is that 31% are furnished. Typically that number would be a lot lower. So we are starting to see some people marketing their properties on a longer term. I also noticed that 40% are pet friendly. That's pretty common. The majority of people don't want to have pets in their home, but people are starting to allow it more and more. What we're seeing in our office now is longer periods of time to rent properties. So when we're in really, really busy markets, we're renting properties maybe in a week or two, sometimes first showings. Now, we're still doing that once in a while, but quite often we're showing properties 10, 15, 20 times over the course of a few weeks before we're getting applications. And as a result of all of this inventory in the market and the added supply that we're seeing, we're seeing a downward pressure on pricing because we're working against the clock as well. And if we lose a month, then we've lost it. And maybe if we do a price reduction, maybe we get a little bit less the next month. So it's something that we're constantly monitoring. What we're kind of seeing right now is just so you have a good handle on where we're at with the market, I would say a little bit towards the end of a storm that we've been dealing with. Primarily, the winter market is always challenging. We see this every year. So we always have a slower market. People don't want to move in the winter if they don't have to. So in the spring, we always have a nice busy spring market, which we see with the resale market as well. And the reason that it's, I think, additionally busy is because there's some pent up demand from the winter months. So it's the people that would move in the spring, plus some of the people that wanted to move in the winter are now, once the weather gets a little better, they're starting to come out. So presently, we're still in the winter market, but looking forward to the next couple of weeks and some warmer weather as we get through that. The slower resale market is also having an impact on the sales market. For the reason that there are a lot of people that weren't able to sell or weren't able to get the price that they wanted or that they needed. And so they opted to rent their property. And so that put more inventory onto the market as well for rentals. And again, some of that downward pressure. We're also seeing new purpose-built rental buildings. So these are entire buildings that are being released from time to time. And what happens there is we'll have, maybe 40 or 60 units that all need to be filled, and they're all released within, usually within a month of one another, or, within a month sort of. So that will, again, it will be absorbed, but that puts a little bit of pain into our market. And then, of course, now we've got these changes with short-term rentals. So we're seeing more people opting to find long-term tenants so that they have that financial stability. So kind of the combination of all of those things is a little bit challenging. That said, this will pass. We are coming into the spring market. These units will be absorbed. It's going to be okay. We have to do our due diligence, make wise decisions, but it's going to get better. We're
Yeah,
almost
well
there.
said. I think, yeah, I want everyone to take away from this call that there's probably a little more doom and gloom than a normal Vantage West presentation taking place here today.
Sorry.
And no, that's okay. Everybody's got, and listen, we just want to bring you the, the reality. And this is a challenge, and there's going to be some bumps and bruises along the way, but it will get absorbed, and we will get back to business as usual. And so there's some tips and tricks that Lindsay's going to share with you to to make sure that whatever pain we feel on this is only temporary. So I'll let you keep going, but I know you want to share what kind of where the pricing is today on some of the most recent lease ups.
Yeah, so we're seeing still reasonable pricing. There is still demand there. I rented a unit in the Brooklyn building yesterday for $24.50. It was a 1-bed plus den, about 650 square feet. Playa rented for $23.50 last month. Discovery Bay almost always is in this same range these days, $2,400 for a 2-bed, 2-bath, give or take. Again, all these prices are plus utilities. And then Verona, we see in the 18 to 2,000 range. So yeah, about 1,900 is about right. Aqua pricing, I couldn't price that out yet. We're a little too far down the road for that. What we're seeing, and some of the advice that I'm giving owners these days, is just to cut costs a little bit. A lot of these properties have been Airbnb long-term. So they have internet, they have cable, they have these full packages set up, they're fully furnished. There's no sense if someone does decide to go for finding a long or a mid-range tenant, at least a long-term tenant, there's no sense in keeping the internet and cable connected. Might as well cut that cost. Also, because so many people have their own furnishings, we want to at least offer the option to unfurnish if it's not a massive inconvenience. Like if it is something that's doable and it's worthwhile, or you have something that you can do with your furniture, consider offering both options. That seems to be pretty attractive for a lot of people. Also, I'd recommend getting on it sooner than later. There are a lot of people that I've spoken with that are waiting until May until things are sort of finalized. And I think that we'll probably see a lot of additional inventory hit the market at that point. We also offer things like incentives. Sometimes we'll offer, a free month of rent. If you want to take it now, we can give you a free month of rent. But usually we'll collect that. We'll actually provide the free month at the end rather than the beginning. So there are some ways that you can offer really great incentives and still protect yourself as an investor. The other thing that I've been doing a lot of is looking for tenants that have a finite time, that are maybe going through a separation or divorce. Maybe they're on a contract and they've just moved into town. They plan to buy, so they don't want to be somewhere for the next 2 or 3 years. Maybe they're just looking for a 1-year lease or even a 6-month lease. That seems to be a smart way to handle things right now. And lastly, the 3 Ps, make sure that your property is showing well. So product, price, and promotion. Make sure the place is showing clean. If it needs a little bit of paint, clean it up. Just make sure that when you're showing these properties, you are competing with other units that are, very comparable in a lot of cases. So make yours shine. It's those little things that can make or break it or make the application go one way or the other.
Awesome. Great presentation. Thank you. I know there's some questions in the chat, but now would be a good time to ask any questions of Lindsay as it pertains to the longer term rentals. And then, let's roll through some of these ones that are kind of just waiting for me as you guys put that in. So James wanted to know if Naramata is still exempt. Is that an issue of abutting a town that's right? Is that, Darcy, maybe you can answer that. Would Naramata fall within the small town abutting a big town?
Yeah, I can't answer that. I'll look into it. I'll make a note.
Okay. Sorry about that, James. No data on that yet. Chris wants to know, friend at the Strand in Vernon, it's her primary residence. She hasn't Airbnb'd it yet. Is she able to? I don't think Vernon has issued licenses. She only wants to rent short-term 2 to 3 months over the summer.
I don't believe it is exempt. I think it still falls under the same rules, but don't hold me to it. I'd have to confirm that.
Yeah, the thing there, I mean, if it's actually her primary, then the provincial regulation wouldn't change it. You're right, Vernon hasn't issued licenses, so yeah, one of those gray area ones. So long as the Strand still allows for it, it's actually her primary, and Vernon doesn't change what they're doing. I wasn't able to get much from Vernon when I called them, but if they don't change their regulations, I would think yes, if it's a primary.
Yep, good. Sounds like the vacancy rate is on the rise then. Is Kelowna anywhere near exceeding the 3%? Bonnie, great question. It's tough to get empirical data on that because it's always looking in the rearview mirror. Anecdotally, I can say we manage like 1,200 properties and we have nearly 100 of them that you could move into right now. So it feels that way, but you have to remember that the lease up, a lot of them are new properties that we just got. And so they're in that sort of early stage lease up. So we don't have a 10% vacancy rate. That wouldn't count. Those are, it only takes into consideration properties that have been vacant for a significant amount of time. So I don't know whether we're at 3%, but I would hedge a guess that we got to be getting real close. Joey mentioned, and Lindsay, do you have another thought on that? I should probably just let you field that question.
You said it perfectly. I don't think we're at 3%, but I think we're getting close. But I think the spring market will shift it back down.
Yep. Joey, the irony is condo costs and interests are higher than ever, yet prices are falling. Well, it's not so much ironic as it is a cause and effect, right? The cause of prices falling is affordability issues. Prices have to fall to meet affordability because the buyer is the one that needs to afford it. So yeah, as prices increase and interest costs increase, it is natural for prices to come down to meet that. Dina, what about rental rates on single family homes, unfurnished, no utilities?
We're seeing those move a little better than condos. The whole market is relatively similar. But because we have more condos in the short-term rental market, there's more condos hitting the long-term rental market. Single family homes, I've rented a few of them in the last couple of weeks. They are moving and we are getting them with great quality tenants. Just a little bit more competitive, the same as we have with everything these days.
Nice.
Yeah.
Lee had a question. If a basement suite in Kelowna has 3 beds, a living room, a laundry room, and the kitchen has a fridge, coffee maker, everything except for an oven, should it not have been issued an STR license, or does the lack of a stove oven allow it to be excluded from being a suite so it can be continued as an Airbnb as long as they maintain their license? I don't think so. Darcy?
Yeah, so the way they define a suite, you're pretty close. It's definitely the stove is one of the key pieces there. The other one being lock off separation between the main house. Another thing they might start looking for, because technically in the bylaw, any upper cabinets they also define as creating a bit of a kitchen, and any permanent cooking fixtures, like if you have a microwave that's a hood vent one that's like affixed to the wall, they would consider that a permanent cooking unit. So again, stove's the big one. If you have everything but a stove and there's free access between the main house and the other, I think you could make an argument. But if you have upper cabinets and a microwave and all that stuff, they might give some pushback. That'll be up to the city.
Nice. Justin wants to know if long-term renting is going to be a good option for Aqua. Lindsay, what do you think? I think long-term, like not long-term renting, but in the long run, I think that's going to be one of the more desirable places to rent a property in town. So I suspect the rates there will be high. But in the short run, when everybody who bought them for the purposes of short-term, who didn't sell, has to stick it on the market, there's going to be some pain in the early stages of that. But as Lindsay said before, this too shall pass. But yeah, I think it'll be a great long-term rent down the road. Do you agree with that, Lindsay?
I do, 100%. I think it'll be a great high demand property.
Okay. In terms of Airbnb being a unit, what if you could co-own a property and convert a unit into a timeshare, or would that make no difference? Yeah, I see what you're trying to do there. You talk about like fractionalizing the title and turning it into a timeshare. That's a good question for a lawyer. I don't know. Hasn't been tested yet. Lee, the suite in prior question has a separate access. Okay. I think Darcy answered that. Council was talking about a transferable license. Yeah, Darcy mentioned that it will run with the property. So that's a nice bonus if you are conforming and you do have that. That's a good selling tool for sure.
Yeah. Again, there's a stipulation there. You have to maintain the business activity, and it has to still be conforming and all of that. But there's a gentleman, I can get more information on that. There was a gentleman I talked to that had really good insight. It's not as simple as your license runs with the land, but it's close.
Okay. Lindsay, Igor's asking what the situation in Lake Country is for long-term rentals.
The market in Lake Country is pretty good. We're seeing a little more demand in some of the outlying communities. We're seeing Glen Rosa get a little more popular, Peachland, some of the neighborhoods in West Kelowna as well, but Lake Country has definitely got it's got good demand. I rented a 3-bed, 3-bath townhouse with like a rooftop patio, newer build. Just rented that for $3,100 this week. So we're still getting pretty reasonable pricing, and I had marketed that for about 3 weeks. So I'd say the market's for a tougher market that we're in, it's definitely.
We lost you there, Lindsay.
Oh,
sounds like you're saying the market's good. Let's keep rolling. We're going to turn it over to Kimberly Thomas. She is our resident vacation rental expert. Oh, you're back, Lindsay. Thank you. Great job.
Yeah.
So yeah, Kimberly, I'll turn it over to you. Tell us a little bit about what's going on in your world.
Are you able to hear me?
Perfectly, yeah, you bet.
Is there a lot of background noise now, or is it better?
It's okay.
It's okay. Okay. Sorry, guys. I don't have a headset. So, so my name is Kimberly Thomas. I'm the owner of Rome Vacation Rentals. We just launched another brand, Rome Destinations, for executive corporate rentals, midterm stays, and medical stays. So Vantage West has asked me to come on and present a little bit here today and just give you an overview of some alternative options that are available. I won't go over this too much. I mean, we've kind of already covered all of this, but the challenges that, people are facing right now, right, is, we can't get a exception, right, for these secondary properties for the resort buildings. So everybody's in the lurch, right? We don't have the vacancy rate to get that. And soon, Kelowna may open up the primary residence licenses again, but they've paused them. So there's a lot of people left in the lurch that were setting up short-term rentals, or they had it all furnished, had it all staged, beautiful, ready to launch, applied for their license, and they're not getting it, right? So we have a couple options, right, that we can help people out with. So I can run over that with you. If you don't want to enter into the long-term market, you're kind of just wanting to hang around and see how things go, or if things change, or if they open up these primary resident licenses again for Kelowna, which would be wonderful. I'm really hoping they do that. There's a lot of people in a really difficult situation now. So a few options that we have on our Rome destination side are executive corporate rentals, medical professional stays, travel nurses, doctors, and we can go over the details of what these people are looking for. Midterm stays, families in transition, insurance claims, smoke damage, water damage, people get displaced. But the one catch is they all do have to be over 90 days now. So you can't host a travel nurse for 30 days anymore. Quite commonly, they're usually a couple months to over 3 months anyways, but that is a limitation that's been brought in. Anybody who's running, a licensed STR and STR in a permitted area, we're expecting fabulous performance this coming season, right? I mean, if you're in Copper Sky, if you have a primary residence in Kelowna that's already licensed and grandfathered in, etc. If you take a look at the booking platforms right now, the rates are skyrocketing. They're kind of heading right back to those rates that we had during the gold rush right after the lockdowns opened up. I don't know if you guys remember that, but that was fun. So you're in a good position with that. But yeah, as far as these three options go, I can go over kind of the pros and cons with that on the next slide. So executive corporate rentals, the pros of that, you get longer terms, higher budgets. They usually have fabulous budgets. You have working professionals in your property. The way we book those are through a direct agency partnership with a corporate rental agency. What they typically do is they'll typically reserve a chunk of time, and then they move their corporate employees in and out. So you are actually signing a contract with the agency, not with the tenants actually moving through your property. And they don't tend to be there a whole lot unless they're doing a lot of remote work. Medical professional stays, those are smaller groups. I rarely see any more than 1 or 2 guests. It's usually one. Sometimes they have a boyfriend or a girlfriend or a mom or something staying with them for a little bit. They're rarely home because they tend to work shift work. And again, that goes through a direct agency partnership with the travel nurse company or the medical stay company. Midterm stays, that pros are their homeowners, which is always wonderful. You know, they tend to be a little bit more respectful on average. Their insurance tends to be, or their rent and their fees tend to be paid directly by insurance, so you don't have a lot of financial risk associated with those stays. And we do have an internal lead channel. We actually have a restoration company launching right now with our sister company, Wolverine Industries, where we are going to be dealing directly with those adjusters and directly with those homeowners on a regular basis. So if that's something that interests you, it is an option. All 3 options are wonderful in the sense that there's, you know, you kind of avoid transient guests, anybody kind of coming in, renting your place for a few months as a midterm stay that has a vested interest in staying. Executive corporate rentals and medical professionals and these homeowners with insurance claims and such really don't have any vested interest to overstay their visit. Things to consider about it though, executive corporate rentals, they're looking for more amenities. So if you have more of a bare bones unit or you have something that's just not really well decorated and you don't have a lot of amenities, it's not going to be overly attractive to the corporate stay agencies. They're looking more for premium. Things like desk workspaces, EV charging stations, coffee bars, premium internet, things like that. So you don't want to try and put up any listing for corporate rentals and advertise that to corporate rental agencies that don't really meet, you know, their standards. Medical professionals and travel nurses are not looking for this. They're looking for more budget-friendly spaces. They go for the smaller spaces on average, and they need to be near the medical facilities, the hospitals, etc. They very rarely have cars, so it does need to be near transit, near bus stops, or within walking distance. So if you have a unit in, you know, Granite out in McKinley, I would never recommend to try and fill it with travel nurses or medical professionals. It's just it's going to be a no-go. Midterm stays, you have to be a little bit more flexible if you're going to open up for this option, because you are quite often, you know, these homeowners come with pets, they have kids, and very rarely is their project or their repair going to be done on time. There's a lot of restoration company delays. That's another reason we're entering that market. There's construction delays. The claims take forever to push through. So you can expect to extend that for them quite often. That can be a pro, right? If your property's sitting empty and you really like the family that's in there and it's going really well, you know, what's another 6 months if they need it, right? So one of the things to consider if you're going to go for any of these options is your risk tolerance. This market has always been a little bit slower in Kelowna, and we don't know what's going to happen with it when all this supply is cut for the short-term rentals, right? We don't know how many people are going to try and hang on and run it themselves as a corporate rental, or maybe put up a direct site of their own. We're not sure what the supply is going to be, right? Come May, we're not sure how many options these agencies are going to have, right? We're working over here to try and build more strategic partnerships with these agencies and be their go-to for when they need to place their guests. But again, if you're in a financial position where you have absolutely no flexibility for vacancies in your property, I wouldn't recommend it as an option. If you're somebody that really doesn't want to put a tenant in and you really just want to try and fill it as much as you can with a midterm stay or medical professional or corporate, but you don't need that month-to-month ongoing regular income off the property, then it's an option, right? The typical supply, again, you know, that they pull from is likely going to be dropping, right? So a lot of them do use Airbnb, a lot of them do use VRBO, and they will reach out to us through there and try and book listings. So when they lose all that supply, they're going to be looking for other options, right? So what we do, I mean, we've just opened up our corporate stay and our midterm stay brand, Rome Destinations, but we also just do full circle management, hands off as well for short-term rentals. So for existing short-term rentals, we do that. Design and staging and setup, we take care of, we can take it right from licensing, hopefully soon, all the way through to setup, staging, furnishing, anything that you need as far as setting up a midterm stay rental or a short-term rental now. Listing marketing, SEO, we take care of all of that. That's included in our services, guest placement, and we also offer 24/7 concierge guest service. So we have emergency lines after hours. We're always available anytime they need us to drop anything off, go help out. We also do run a commercial contracting and property maintenance firm. That's Wolverine Industries. That's the same company that we're branching off into the restoration as well. So we're always available for emergency maintenance. And we do take care of the quality control, the cleaning, and the inventory of all of these listings. So if you're interested in learning about any more of that, feel free to contact me at the contact information at the bottom there. But yeah, and let me know if you have any questions. I'll do my best to answer them. But yeah, there's a lot of uncertainty out there.
That's awesome, Kim. Thank you very much. And I'll just give you a quick plug. I am a client of Kim. She managed a short-term rental for me in Peachland, beginning to end, helped with the design, the staging, the setup, did a great job of keeping it full, managed a lot of guest concerns, a lot of actual stuff that had to come up with sprinklers not working, pools not working, hot tubs not working, and she was always there and always on it and always a great attitude, and she did a great job. So I can't recommend Kim enough. Sometimes, I'll recommend a business that my clients have worked with, but in this particular case, it's someone that I've worked with personally, and it's 5-star all the way. So let's turn it over to the questions. All right, Bogdan had a question. What are the typical properties that are most desirable? I think you kind of touched on this, but for the executive rentals, what are you seeing?
Typical properties, so they're not looking for, basement suites, right? They're looking for more upscale condos. They're looking for more upscale homes. And they're looking for amenities, well decorated, well staged, nice linens, nice coffee bars, EV charging, things like that, right? So you don't want to if you've got a kind of an original, let's say you've got an original Playa del Sol unit, with some of the appliances are breaking down and it's starting to, it needs a renovation. It's not well furnished. It's just not looking up, I wouldn't recommend trying to go corporate until you do a little bit of upgrading to the unit. Now, if you're going to do that, you definitely want to balance out whether or not you want to take that risk, right? Because the corporate market may be slow, right? Or it may be really busy come May. So, yeah.
Got it. That's great. Yeah, so there was an FYI here that Stratas have and will continue to charge fines to units that are doing corporate rentals when it's new employees coming in and out of the units, and they're being looked at as short-term rental guests since the new people continuously in and out. So do you have any info on that, or have you heard that yet, about Stratas sort of pushing back at their own level?
No, and I think the way that's going to have to be handled is strata by strata, right? I mean, they're all going to have their own rules on how they want to handle it. So if you're thinking about launching a corporate rental or you're thinking about running it midterm, you definitely want to check with your strata if you're permitted to do that prior to doing any upgrading or making any forward decisions with it.
Yeah, well said. Karen wants to know, can a BC resident with a Kelowna vacation property use these options? A non-BC resident, excuse me. Can a non-BC resident?
A non-BC resident, like run a court, you can run a court. The way that it's set up with right now is you can run a corporate rental as long as they're there over 90 days, right? If you're renting it out as a corporate rental under 90 days, then they're going to consider you running a short-term rental, right? So you can, yeah. You just want to make sure that your minimum stay is over 90 days. So, and I mean,
because in that situation, the residential tenancy act still applies, right? North of 90. When you're signing those corporate leases, there's still residential tenancy to contend with, which means you are complying at that point.
Yeah, and that's another reason some people might find it attractive is, when they have no vested interest to stay, right? So, yeah, but as far as that 90-day goes and moving the employees in and out, right? It's really a gray area kind of because the contract in the rental is actually with the agency, right? But if they're having, guests moving in and out, if the strata says no, the strata says no, what the province is going to do, they haven't addressed that, right? And what the city might do, right? So if you see a huge influx of these move in, they may all of a sudden notice that and then decide, oh, we need to actually address this more directly, right? But they haven't really done that yet, aside from just the 90-day.
Yeah. Yeah, sort of a personal experience of mine, and I have a second property in Scottsdale, Arizona, and I actually just sold that property so I could buy one where I could do short-term rentals because the HOA in that area said no dice on the short terms. What was interesting though is because I wasn't able to do short terms, we were in the midterm space. We were usually doing 3, 5, sometimes 7-month rentals, And we were finding that the insurance companies were always the ones that we ended up getting our checks from, and we were getting extremely good rent. And yes, they do go overtime, and that can be the challenge if you want to come and use your place,
Mhm.
because sometimes they do go overtime. But for us, it was a great source of income. We had just, the checks. You never have to worry about the checks bouncing, and they're, you know, you're getting a nice premium from the insurance companies often. So that was good. And interestingly enough, we made the shift to short terms, and now because of the glut of inventory in the short-term rental market in Scottsdale, we're getting less per month, and we have double the square footage. And it's quite interesting how the whole supply and demand thing works. So I'll probably go back to midterm with our Scottsdale place, and
Yeah.
that I think that's where the market is for the short run anyway.
Well, and your expenses with corporate stays and midterm stays are lower, right? I mean, you can decide what kind of supplies and amenities you want to throw in, right? But they don't expect as much as the short-term guests. And yeah, I mean, we've what we find interesting about the corporate stays is they don't haggle, right? The travel nurse agencies will haggle, right? They'll send you, they'll try to lowball you, but the corporate stays just kind of, they'll message you and say, this is the budget that we have, can you do this? And it's usually well beyond what we would have expected, right? And
Nice.
of course we can do it and we'll accept it, right? So yeah, it's much different. And I mean, that's the thing with the travel nurses and the medical stays. If somebody's going to go that route, you want to make sure you're okay with more budget-friendly totals that you're going to have them bringing in, right? So, but yeah,
For sure.
yeah, corporate stays are they're enjoyable for a lot of people. They just have a lot less moving parts.
hmm
Mhm.
Justin asked a question here. What kind of rates can you expect? Now, you and I were talking earlier, and you gave me a pretty good example of one that you just recently filled, and it seemed like it was about 50% more than what you would get as a long term. But maybe share a couple sort of rates so people can get a sense of the type of rates that are happening in the midterm space.
Sure. Yeah. So we have had a travel nurse in a unit in the Brooklyn for about 3 months, and that's been about $3,300 a month. She was there for 3 months. Now, one thing to know when you're doing medical stays is they're by contract with the hospital on average. So they come for their contract and then they leave, right? She's come for a contract, then she's leaving for a little bit, and then she's got another contract now at the end of April that she's coming back for. And same price, we're going to be doing the 3,300 for her. The only thing you do have to know about corporate stays, midterms, not midterm stays as much, but corporate stays and travel nurses is it's never going to be month to month to month to month, right? So now that owner does have a little bit of a 3 week lull, right? So they have that 3,300 straightforward for each of those 3 months, and then a 3 week lull, and then another contract, right? So it's again, if you're in a financial position where you need that payment every month and you can't accommodate lulls or any vacancies, then it's something to consider. But that's how that
Well,
one's
my
offering.
thinking is if your reality on the same unit was say $2,500 a month, and now you're getting, 3 grand plus, then what you would do then is allocate the surplus to a buffer account that would then be used to weather whatever, if it's a month or two while you're vacant. You just have to have a little bit of financial management attached to it, with an understanding that you kind of make hay while you're making it, but it's not all yours to keep, because you're going to have to give some back to the mortgage man.
Yeah, yeah, exactly. We had one corporate stay, and this may not be as applicable to what's going to be happening in the market this season because we don't know. But the highest corporate stay total that we were offered was last summer, and that was $8,500 for a basic 3 bedroom house out in the Lower Mission near Rotary Beach. And they were with us for 4 months at that rate. So yeah, it can get pretty high, and no haggling. They just sent us a message and said, can you offer this rate? And we said, sure.
Nice.
Sure, we can.
Luella had a question about your fees and ongoing services. I think that's probably a great conversation for you guys to have offline. So just gonna skip back to here, and Luella here, just check it out, booked at romevacationrentals.com. You can ask her all the questions you want about her services ongoing. Okay, Chris, how do I list through executive rentals? Mine's definitely executive. Well, you can try to go it alone, but as Kim mentioned, it's very much going to come down to the relationship with the networks of these agencies. And so I think, certainly you could give it a whirl on the DIY, but I think you're probably better off to work with somebody who has those contacts, because I think that that sort of B2B relationship is going to be really key in keeping these things full.
Yeah, the
Uh,
agents tend to prefer to work with hosting companies or property management companies that they know have standards across the board, right?
yep.
And they'll come back right? So building strategic partnerships is a little bit easier business to business that way for corporate stays, and same goes with the travel nurse agencies and such, right? Midterm family stays and insurance claims, I mean, you can kind of go through classifieds if you want, but there's a lot of risk involved if you don't have safeguards in place for those type of rentals. So yeah, I'd always advise to at least consult with a manager about that and chat before kind of going it alone with it. So.
Mm-hmm. There's also a question, can you stay with your Airbnb and VRBO provided you're abiding by the minimum lengths of time? Do you have any
Can you
insight on that? Can you keep your property listed on Airbnb and VRBO, but offer it as a midterm?
So this is what they're doing. The data sharing begins May 2024, and it's going to be shared with the government, and it's going to be shared with the city authorities. So what they're saying they're going to do is they're going to tell Airbnb and VRBO and the booking platforms to remove any and all listings that don't have a valid business license on the listing. So if you don't have a business license and you pop up a listing on Airbnb, you book it up solid with corporate stays, which are usually pretty high totals, and then you get told that your listing is invalid or needs to be removed. What you could be facing, depending on how the platforms decide to handle this, and I'm guessing they may pass these costs on to the host, is you could be facing some pretty hefty cancellation penalties. And they can go anywhere from 10 to 50% to 100% of the stay cost. So I wouldn't recommend it until they've been more clear on how they're going to remove these listings.
I had a question with respect to cancellations because I know that the platforms themselves pass on some pretty significant levies to their members, the owners, if you cancel on a guest. So what about, people who've got bookings well beyond the May, well into this summer, and you're suddenly offside? Are we being forced to cancel those bookings and then therefore refund? And then are we in a potential situation with Airbnb where they're going to additionally fine us for kind of taking money out of their pocket?
Yeah, so Airbnb's extenuating circumstances policy, and same with VRBO, they have their own clauses for cancellation policies. They haven't addressed it in their documentation yet. What you want to do is you want to phone Airbnb and have a conversation with the representative directly about this, because everybody's getting a different story. So I would not want to tell you, no, you're not going to face any fines. And then the next thing you know, you talk to one other rep that decides that you are. Until they pop that into their extenuating circumstances policy and address it with government regulations or even, city regulations, they don't have to skip the fines on you. They can charge you. So yeah, I would definitely give a rep over at Airbnb a call and plead your case as soon as possible to try and avoid those fines.
Got it. Bogdan asks, is there a minimum stay? Yeah, it would be the 90 days. Karen asks if this is a good strategy for avoiding the spec tax. Yeah, I think as long as it's made available for long-term or short-term, midterm would be part of that. So I think as long as it's made available, you can certainly comply with the spec tax bylaws, correct?
You'd have to meet the vacancy, right? You'd have to meet the total occupied, right? I mean, I think you're supposed to have a residential tenancy branch agreement signed to avoid the spec tax, as far as I know. So if you're going through corporate rentals, you may not be able to provide that. What you want to do, actually, I think the spec tax documents just got mailed out to everybody. Give it a read on what they actually do require. Because if they require a residential tenancy branch agreement for a specific amount of time, then you likely wouldn't qualify for spec tax, avoiding the spec tax. But yeah, I'd look into it.
Yeah, I think that's worth us even doing some digging, and we can find out the details on that and get you guys some info on that. Bogdan wants to know what the vacancy rate for premium executive condos per year on average.
Oh, I don't have that on my desk.
That's tough data to get, hey?
But yeah, I mean, I can look into that one. I don't think that anybody is actually generating that data in our market. I mean, we have short-term rental data softwares out there, but we don't have corporate stay vacancy generators at all. We don't have any data. Yeah, so anybody that's into software or tech, hey, there's a need out there. If somebody wants to launch a platform, we need a data platform.
Awesome. Luella asked you to put your email in the chat, so if you can open up your chat and drop that in. Bonnie's saying if you have a minimum 90-day stay on Airbnb and VRBO, it is no longer short-term rentals, so shouldn't need an STR license, is not advertising an STR.
That's another question that I actually had. So that's something I'm looking into, is whether or not they're going to be removing these listings if they're set to a minimum stay of 90 days. if you read how they've worded it, it says any listing without a business license will be removed, but are they going to remove them if we have it set to a 90-day minimum, right? So that's something I'm trying to find out right now, because if we can list a 90-day on short-term rental websites, that's fabulous. But they may pull them down.
Okay. Yeah, good. Also, just on the note of putting your contact information in the chat, Lindsay, throw your information in there in case people want to talk to you about long terms. Darcy, throw your stuff in there. Same thing with you, Amanda. Put your info in there if they want to, anybody wants to talk about specifically the resale market. Awesome. You guys have been great. I really appreciate all the questions and the engagement. Thank you for sticking with us for an hour and 20 minutes. I know that was a lot of information to digest. I hope you got your questions answered. If there's anything that we missed, or if you wake up in the middle of the night and go, oh, shoot, I forgot to ask this, we, of course, are here at all times to get you whatever information that you need. And if we don't have the answer, we'll go and get it. So thanks again, guys. Appreciate you giving us your attention for the last hour and a half. And I wish you guys nothing but the best as you navigate these challenging times. We're in it with you. We're investors too. We don't just sell and manage this stuff. We all have properties of our own, and we feel the pain, and we're right there with you. So let's navigate this as best we can. Let's make great decisions, and let's weather this storm together. Because on the other side, we still own property in one of the best places in the world to own property. And there's seasons, right? And we're going through a bit of a winter season right now when it comes to property ownership. But after every winter comes spring. So with that said, I'll thank you guys once again, and I'll sign off for the evening. Bye, guys. And thank you to my panelists. You guys were wonderful. Thank you for sticking around for the whole hour and a bit. I really appreciate you guys. You added so much to tonight.